Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwago. On the show today, ShopRite, Africa's biggest grocery store chain, posts surprise drop in annual profits. African leaders look forward to new opportunities in China-Africa cooperation. Plus, Kenyan motorists plan street blockades over planned fuel levy. Let's begin with trading across major markets and starting off here on the African continent. Most markets are closed for the Muslim holiday except South Africa and Kenya. Now at intraday, the South African JSE index was up 0.28%. Kenya is trading but closed on Monday down 0.16%. The market in Nigeria was down on Monday 1.71%. Egypt has been closed since Sunday. In the meantime, markets in the Middle East are also observing the Muslim holiday as they all remain closed since Sunday. The markets which traded last on Friday saw the Dubai market lead gains with 0.44%. Abu Dhabi was down 0.45%. Qatar closed in the red 1.50%, leading losses. Saudi gained marginally 0.02%. And in Europe, stocks were slightly lower in morning trade as comments from President Donald Trump weighed on the dollar and tested market optimism ahead of U.S.-China trade talks. Well, let's cross over now to the Frankfurt Stock Exchange for an update from Daniel. Hello, Daniel. Good afternoon. Good to see you again.
Yeah, good to see you again as well, Chimi. Hope you're doing fine over there in Lagos.
I'm doing great. Our U.S. President Donald Trump has been making strong comments about the Fed and interest rates directions. How is this latest swipe from President Trump impacting currencies and raising concerns among investors?
Well, if you ever become U.S. president, you should know a couple of things. First, you don't question what your intelligence authorities like the FBI say, and also you don't try to intervene and try to change decisions by the Federal Reserve in the United States, because those are institutions that you might not agree with, but who are completely independent. So when you talk here to investors, they are calling all of this completely as a no-go scenario that we have seen lately happening. It's not the first time that U.S. President Donald Trump has been saying and kind of not approving what the Fed has been doing. Already during his campaign, he was very much in favor of a weak dollar, which means not more interest rate hikes in the United States. And yesterday, he made this interview, or he shared in the interview with the Reuters news agency, that he doesn't agree with the policy of the Fed, and simply he doesn't even have to agree. It's not his business what the Fed is doing. Of course, he cannot agree, but this should not change in any way what the Fed is doing. And it's even more surprising because Mr. Powell, he is the new head of the Federal Reserve in the United States. He was even appointed by the U.S. president after he decided to not extend the contract of the predecessor of Mr. Powell, Janet Yellen. And yes, when we take a look at the market, at the currency markets, we did see an impact happening after those comments were released. The dollar was going down and the euro got stronger. Surprisingly, though, this did not have really a big impact today on the trading day here in Frankfurt. Usually with a very strong euro, the very export-oriented DAX is having a hard time, but this is not the case. We are in the green and the winning zone. Let me actually have a look. We are having a plus right now of about 83 points here at the moment. And this is even happening despite the news that Donald Trump was also stating that he does not have big hopes that the trade conflict between the United States and China will be solved very soon.
Well, I must tell you, Daniel, I won't ever be U.S. president, so just to get that right. Anyway, let's look at Germany, where you are now. That country is on track to retain its position as the world's #1 in trade surplus portfolio. What's the magic behind this, and is it sustainable under the new trade wars and geopolitical shifts?
Yeah, it's going to be very interesting if also this latest surplus news will have any kind of impact on those trade talks, between the United States and Washington. And, we can be very sure that Donald Trump is again furious about it. He has been criticizing Germany along with other countries for a long time about this big surplus. Well, you might not agree with everything what Donald Trump says, but when you take a look at the numbers regarding the surplus, you can somehow understand actually his reaction. According to the German IFO Institute, Germany will be reporting, because of the export business, for the third time the biggest current account surplus worldwide. And we are talking here about an enormous amount, close to 300 billion US dollars. Number two will be Japan with about 200 billion US dollars surplus, followed by the Netherlands. And the United States, a completely picture over there, will be once again the country with the biggest current account deficit of almost 420 billion US dollars. So yeah, let's wait for new tweets from Mr. Trump, Jimmy.
All right, let's move over now to some corporates there. The ECB has penalized France's Crédit Agricole over the bank's capital reserves. Is this a cause for concern for the lender, depositors, and, of course, investors?
Well, I'm sure shareholders of Agricole Bank are not going to be happy with this news, because exactly we heard it from the European Central Bank here in Frankfurt today that it fined the French lender Agricole with a total of 4.8 million euros, so about 5.5 million US dollars, over past irregularities in the way it declared its capital reserve. The European Central Bank said in a statement today it slapped the lender itself with a 4.3 million euro fine. Meanwhile, its corporate and investment banking arm must pay 300,000 euros and its consumer finance unit 200,000 euros. The fines relate to CA classifying some of its assets under the CET1 heading in public statements during 2015 and 2016. Sounds very complicated. So what does it mean? Well, it seemed that CA failed to first secure permission for the move from supervisors. Banks, that's a rule, they must hold a certain amount of so-called CET1 capital in relation to their exposure to financial risk as a buffer to absorb potential losses. Regulators from all around the world introduced tougher targets for the capital market in the wake of the financial crisis, most recently in the Basel III package of rules. Those were finalized in last December.
All right, thank you for your time, Daniel. Tomorrow is another day. See you again.